And the good news is, here's the biggest asset manager that said it was 3 years ago, said it was for money laundering, endorsing it. And of course, they only do that because they think they can make money on it, and not because they are pure of heart. But they can create paper Bitcoin. And somebody on Twitter said, "Oh, no, this is great. We'll be able to see their addresses and see when people buy." And then I said, "What makes you
won't.
They're going to tell you their addresses?
Correct.
There's no way you're going to know what they're doing." And this has paper Bitcoin written all over it. And I've been doing this for 30 years in gold, GLD, so the good news is they're endorsing it, and they'll bring more investors into the fold for sure, because now a lot of people who can't, because of career risk, say, "Hey, client, put some money into Bitcoin." Now they can. But the bad news is they'll get their claws on it, and we're going to see more paper Bitcoin.
So I'm just curious to get your guys' thoughts. And of course, you have, tremendous amount of experience, both of you guys. Wouldn't you say that Bitcoin is slightly different though? Because, you have gold's physical characteristics. So we know that this happened in the gold market. Larry and I, we've had this conversation before, right? We know in terms of what's happening with gold, but wouldn't you say that because of Bitcoin's physical characters, its ability for people to take self-custody of it, for you to just, take it out easily, without encumbering this crazy cost. So you try to do that with $100 million worth of gold, and it's going to be a lot of security guards and a lot of big trucks. But you do that with Bitcoin, it's extremely cheap. So wouldn't you say, Caitlin, that there's a little bit of a check there in terms of them being able to do what they did with gold?
You're laying out really well the reason why Trace Mayer called Bitcoin the apex predator of finance. Because ultimately, when that proverbial run on all the institutions that created paper Bitcoin occurs, and it inevitably will, then you will see, as Buffett likes to say, who's swimming naked when the tide goes out. Okay. That's absolutely true. It's a lot easier for people to demand to take physical delivery of Bitcoin than it is for gold. Absolutely true. The challenge is that I don't think these spot ETFs allow the holder to convert to the physical. The choice that you have, and I could be wrong about this, but the choice that you have with these spot ETFs is to sell the ETF unit, not to convert to the underlying. And see, this is where the games get played, right? They try to trap people into thinking, and the same thing happened with the securities versions of gold, right? It did, no question, bring in more investors into the precious metals asset class when the ETF was created, no question, increased liquidity and temporarily increased price. But and again, Larry's been doing this for 30 years. There's no question in the minds of most of the people in that market that all the paper gold that got created, because the same thing was true with the gold ETFs, you could not redeem for physical. And your question is, even if you could redeem for physical, people couldn't physically take it. They don't have the vault set up. They don't have the security set up to transfer it. You're absolutely right. It's a lot easier with Bitcoin. However, folks get trapped in these securities versions thinking that they own the real thing. But if you cannot redeem for the real thing, oh boy, you don't own the real thing at all.
Yeah, it's not your coins. I mean, I believe there was some talk, and I haven't read the S1. I probably should have before this interview, but I believe there was some talk that certain very large people might be able to take the coins directly out of BlackRock, something like, I don't know, 40,000 units or something. I don't recall, and that's possible. But I mean, and frankly, that's true with GLD too. You can, at a certain size, you can ask for the gold. I don't think anybody ever does it, and the size is quite large. But to your point, Nico, I think I know where you're going. Is it going to be as easy to manipulate Bitcoin as it is to manipulate gold? Is a question I get asked a lot, and I would say not quite, for a couple of reasons. One, because gold has been around a lot longer, and they've built up all kinds of infrastructure to do it. So they've had 40 years to figure out how to do it, and they've done it really well. And Robert Rubin was a JRN trader before he went to Goldman, and then he helped Clinton wreck the bond market. And so they've got a great system, and they did it all through the Cayman Islands. They had all these entities in the Cayman Islands that were, buying and selling and shorting gold, and they had an unlimited balance sheet. I mean, I'm quite sure I believe strongly, I don't know if Caitlin agrees with me on this, but I believe quite strongly that the government runs two sets of books, and that they've had national security directives from the president about doing financial things kind of off the books. And I think that there were times when it was important where they would short gold or go long the S&P futures or do whatever they had to do. And if it turned out that trade, whatever hedge fund they had to do that on their behalf, did not work out for them, they just printed the money and filled the hole. And it was all off balance sheet, off books. I mean, Catherine Austin Pitts talks about this too. So it's going to be harder to do this with Bitcoin. And the biggest reason I cite is the price volatility. With gold, a big year is up 30%, and a big down year is maybe down 15 or 20%. Look, you can short into that and hold it and wait, and then I mean they can play that game. This is a whole different asset. This is a whole different animal. And Luke Roman and I have laughed about this a lot. I mean, when Bitcoin went from 5 or 10 grand to 50 grand in the space of 12 months, that was a holy fucking shit moment for a lot of central bankers all over the world. I mean, they were like, oh my God, we got a real problem here. And so, if you think about how they manipulated gold and they did it through the Caymans, you're down 30% in a position, it's leveraged, whatever. You can do it. But when you've got something that can rip your face off to the tune of a 400% appreciation very quickly, that's an entirely different kettle of fish. So they're going to have to be careful. And to the question of, is it being manipulated today? You can go to Glassnode, you can look at the futures contracts, you can look at the number of derivatives outstanding. And Caitlin knows this probably better than I do, but there are billions of dollars involved in playing around with paper Bitcoin. But if you go to CoinMarketCap and you look at what's trading every day, and you look at the total market cap, it's still pretty small. I mean, the paper gold traded as against the underlying physical moving around. There have been various computations done by some of the really smart people that show that it's 10 to 100x. And I don't think that's occurring yet with Bitcoin.